Hello, class, and welcome to this week's video. I haven't seen you in a couple of weeks after the spring break, and then last week was pretty straightforward. You know, the readings for this week also are pretty straightforward. They're just got a lot of strange accounting terms, and I'm not a big accounting guy, as you may be been able to tell, since I fell off once the accounting and financial practices section started. I like fundraising. I know quite a lot about it. I've done it a lot in my career, but the accounting side I've only done from a management perspective. I've been on several boards that have had to do it. I sat as a treasurer once, and I was an executive director a couple of times. So I needed to know it, but it's really not my strength. That being said, I want you to do a fairly simple accounting exercise for today's homework. And I'm going to put this template up so that you can see it and you can just fill it in. I'll walk you through it today, and then you can fill it out and try and do your best. You can also create your own template or find one online if you wish. So let's take a look at this. As you can see, geez, my eyes are going bad. All right, I've been working all day and my eyes are feeling a little weak. Usually I don't need my glasses for this, but I guess I do today. All right, so here's your template. Over here, we've got categories of expenses. Down here, we've got categories of income. All right. What you need to do is fill out each of these expenses and this income for your proposed nonprofit that you will be putting together your, it's basically a business plan, right? A nonprofit strategic plan that you'll be putting together for your final assignment. This should be a nonprofit that does not yet exist. It can be something that you've been brainstorming. It can be something that you've done a lot of thinking about, but you shouldn't have done any work for it. And it certainly shouldn't already be established. So think about what your nonprofit is, and if you don't want it, if you still don't know exactly what you're going to do for your final assignment, that's okay too. Just think of an idea that you have and start filling these in. The first thing you're going to want to do is think about what debts pre-exist for that nonprofit. Probably, for most of you, there'll be very few pre-existing debts going in. And then what sort of assets exist? Maybe you have $20,000 set aside for this nonprofit. So you'd put in $20,000 into your reserves section, as your reserves are the money that the nonprofit already controls. Okay. Maybe in addition to that, you own some land. That land, you don't really want to put that land into this because you don't want to consider your that as income for the year. So, but you do want to know that you have it. So you can place it into this particular, you can place it in there if you wish. Probably have other kinds of assets as well. Then you go on and you break it down by the quarter, or I suggest breaking it down by month. For example, if you know that you're going to be hiring one person for the first month, and you can change these, of course, away from January, and you know that you're going to be paying them $2,500 a month, then you can put it in there. In each of these cells, I have already placed in the calculation that will make it equal to 12.5% of salary for your necessary benefits. These are the benefits that are required by law. So that'll be your expense per person that you employ. Will be that your salary plus these necessary benefits, plus whether rents and utilities, insurance that you're required to have. You should do some thinking about how much insurance is going to cost. It's quite a lot. Office and printing, and miscellaneous expenses. Additionally, you're going to have to think about how much your fundraising is going to cost. If you have a fundraising event that's going to be in April, and it's going to cost you $1,200, then you need to include that in April. If you're going to do a big mailing in June, you want to figure out that that's going to be probably about 55 cents per piece, per mail piece. So you could buy, say you want to mail 10,000 or 5,000 people, you could say equals 5,000 times your 55 cents per piece. And then you'd be able to calculate the mailing costs for that. Printing costs for fundraising are going to be separate from your office and printing costs if you go to a professional printer, but that might be also included in your mailing costs. For 55 cents per piece, I would expect that they would not be mailing it. You'd probably be looking at more like $1.50 per piece to have a professional printer mail it. And then miscellaneous fundraising costs. And you can add a row here by simply inserting a row and add some additional fundraising costs if you wish, such as, what other additional fundraising costs might you have? Permits, if you wanted to do a march or something. All right, accounting, you do need to account for accounting software, unless you're a very small nonprofit, in which case then you can just say that you're going to use Excel, but you'll still need to set some time for it. And whether or not you'll want to have an audit at the end of the first year, in December, which usually costs between $800 and about $2,000. And then how much you're going to cost for each programming. Now, this is where you get into your specialty. You know how much your programs are going to cost. But make sure that you consider more than just the overall cost. There will be other costs involved in programming, such as finding space, finding tools. If you're going to have volunteers go out and create something, you need to give them resources to do that. Computers, anything else that programming might cost. Capital expenses, you might want to add every month $200 toward some major purchase that you have at the end of the month, or $2,000 that you might want to have, so that by the end of the year you will be able to purchase something. All right, or you might want to take out a huge debt to create some sort of to buy a capital space or something, in which case you might start off paying. I had one organization where I was paying $750 a month in debt when I took it over, and by the end of it I had paid off that debt, or what we call retired it. And then I need you to design a bit of a income plan, right? Are you charging per person? Say you have you're going to be having available 15,000 tickets a month. Let's say 1,500 tickets a month. You're doing 15 shows with 100 people a month. Say you're a theater, like what I used to run in one of my previous lives, and those tickets cost $26 per ticket. That is actually the price that we charged. Then I would say 1,500 times 26, and that would be my fee for service for that first month. Right? And that's going to automatically pop into all of your things. And maybe you're going dark in March, so you're not going to be able to charge it in March, but for the rest of the months, you're going to be able to find, well, in the summer's a horrible time. So say not dark in the month, but we'll go dark for the summer and try and reopen in August. Summer is horrible for theater. And I'm going to set it up so that this total will automatically fill in when you get it, okay? Maybe you're getting a contract from the government to do something. In the summer months, you get, say you're running that nonprofit theater again. Say you want to get a contract from the YMCA or City Parks and Rec to run a theater program for students, and you're getting $8,000 a month to do that for just 3 summer months. August is looking pretty bleak, so that would be a really good time to do some sort of a fundraising event. And you expect there to be $10,000 coming in from that fundraising event. There we go. See, so this is how you're going to fill it in. And of course, other income. if you were to get a really broke month, such as August, and you're not getting any money at all in August and July, you might allocate a couple $100 from reserves. If you do that, then you're going to have to add that to here to the reserve cost. All right. I hope that all makes sense, and you can improve upon this very basic spreadsheet that I just set up myself. The things that I want you to consider are your net surplus should be 3.4% of all assets. So if you walked in with $20,000 of assets other than cash reserves, actual assets, then you want to cover inflation. Inflation is supposed to be calculated at 3.4%. Usually it's closer to 2.8 or even lower, but 3.4% is the conservative estimate that's considered good practices. All right. Also, I want you to be able to consider, you don't have to do a month breakdown, but you do have to do at least a quarterly breakdown. I want to see that you're thinking about your budget over time. Month makes more sense to me because I've run a lot of monthly budgets, budgets that work on a monthly basis. So month breakdowns make a lot of sense. You do need to account for fundraising and accounting expenses. In your income category, I want you to have at least 6 of these rows filled in. And I want you to have at least 5 of these rows filled in, and at least 3 of these categories, okay? There should be at least, and ignore other income. You should have at least 3 of corporate sponsorship, foundational gifts, individual gifts, and earned income filled in somehow. How much of each category is up to you. I mean, only you know, only your nonprofit is going to have its particular financial profile, but do keep in mind the Fisher's White and Young, the piece that by Dennis Young that you read for this week, and the piece by Dennis Young that you read last week that discusses what kind of organizations have what kind of profiles, how they are able to work. It seems to that particular profile rule is true for the most part, but it does seem to hurt organizations that want to give out public goods instead of private goods, because private goods, it's just easier to find money for those. What else do I want you to know? Think about. I also need you to think about restricted funds, okay? Somehow you can mark that here. Fees for service are not going to be restricted funds, but a grant is likely to be restricted funds. So you might want to mark that this is a restricted grant, and you might want to account for the amount of money coming from that restricted grant that has to go to particular things up here. If you have too much restricted funds, you could be getting $100,000 a month coming in, but you can't spend any of it on salaries, say, or rent, and you're going to lose your organization. So make sure that you account for how much of it is restricted and how much of it isn't. And I'll try and go back and see if there's a way that I can make this spreadsheet help you account for that before I post it. And that's about it. I hope if you have any questions that you'll contact me, especially using the text messaging has been really effective, and also my email at nuriel.heckler@ucdenver.edu. Our text message is 970-236-6311. And, visit me on my Zoom hours on Monday. I'll be there from 11 to 1. All right. Let me know if you have any questions. Thanks a lot. Bye.